Hello traders and welcome to another video review. Today is Monday, February 16th, 2026. Let's take a look at the economic calendar for today. So what do we have here? Generally some data from the Japan. Let me just switch the importance of this event to medium and to, of course, high importance. So what do we have here? Japanese GDP up from minus 0.7 to 0.1, and on the yearly measure up from minus 2.6 to 0.2. Industrial production in Japan in line with the expectations, minus 0.1%. We are waiting for the data from the Eurozone during the London session. Industrial production in Eurozone is scheduled for at 11 o'clock. At the same time, Eurogroup meeting will start. During the New York session, we got housing starts data from Canada at 2:15. Then 10 minutes later, we got FOMC member Bowman to give a speech. Another set of data from Canada is scheduled for at least at 2:30. CPI and manufacturing sales. At the end of the day, German Buba President Joachim Nagel will give a speech at 22:07. So that's the beginning of the week on the economic calendar. So let's now switch to the charts. We start with euro dollar. 30-minute chart of the euro dollar is showing us a continuation of the consolidation. All right, so let's switch to 4 hour. It will be most likely the same. There you go. First, we get the consolidation around the level of 1.1927, 1.1888. Then we have a breakout lower, one step lower. Then test of the technical support at 1.1837, and then back towards the technical resistance 1.1888, and now the market keeps consolidating in a tight range with almost no momentum change around the level of 50, occasionally bouncing up from the 100 periods moving average. So this is the euro dollar. Not much is going on here. Non-impulsive trading to the upside, no impulsive trading to the downside, just a steady consolidation around the level of 1.1860. The British pound goes back below the 100 periods moving average, right now at 1.3665, tests the 1.3589 technical support, and it's back above the trend line, the orange trend line. Momentum wise, we went from 42 points to 53 points. Nevertheless, right now we are at the level of 50, so everything can happen right now. This correction here, double zigzag, might be too time consuming to be a part of this movement to the upside, this 5 ways. So there is something else going on here. Maybe this correction is a bigger part of something new, some kind of a new cycle here, and this wave was the last wave to the upside in a cycle. As you can see, this time, right from the top to the bottom, or even to this bottom, to create this correction is way too wide compared to the local corrections during the wave 2 and wave 4. So right now we are waiting what it will happen here on this market, how the market will react eventually, whether it will be upside breakout or downside breakout on the British pound. For now, not much is going on. US dollar versus the Japanese yen keeps consolidating as well. This last leg to the downside from 157.66 went as low as 152.28. Just this is like a 20 pips above the swing low from the January 27th. So right now we are consolidating. Nevertheless, the bearish pressure is still visible. So if we break below 152.11, the outlook might be even more bearish. Please notice the momentum. The momentum is right now moving lower, and despite the fact that we are trying to bounce from the extremely oversold conditions, the market didn't actually broke above the key short-term technical resistance 154.09. I don't even want to mention 155.59. right? So right now consolidation on another major US dollar versus the Japanese yen. The same situation, almost the same situation is on the cable and euro dollar. So the market participants should take into consideration this situation, because the market itself doesn't know where it wants to go. So no impulsive movement, neither to the upside nor to the downside. This is why we developed this consolidation, steady waiting for the development to the upside or to the downside. Gold market, after the test of the trend line, right, we bounced a little bit, trading very close to the 100 piece moving average, 5023, and the trend line. Nevertheless, it looks like this trend line is starting to be let's say rejected, and the market keeps trading lower. At least it is below the level of 5,000 and below the 100 pin swing average. Potential high for the wave B is located at 5,111, just as expected after 3 waves to the upside has been done here. So what we are considering right now is the correction to the downside is the impulsive wave. ABC to the upside is the wave B. A little bit too long on a 4-hour time frame chart. It took a little bit too long for the market to do it. Nevertheless, we are still assuming the scenario to the downside, which will eventually result in the progression of the newest wave 3 to the downside, breaking the low of the wave A located at 4,407. So right now we are waiting for this development and not touching this situation whatsoever. S&P 500. Nothing changed here on the market. We keep moving up and down inside a tight range, and there is still no breakout to the upside nor to the downside, as the market participants must take into the account the lower volatility on the S&P 500. Still, the local low is 6,727, local high 7,011, I guess. Yes, 7,011. So as long as we trade inside of this range, the market remains in trendless. Basically, a larger time frame trend is obviously to the upside. It took some time after the breakout below the trend line, and then the test of this trend line from below, for the market to develop this kind of a consolidation. Nevertheless, please notice that there is no continuation to the downside, no hard strong dynamic continuation to the downside, or no invalidation of the 7,011 points swing high and all-time high, right? So still the market is like it is trading sideways, like doesn't know where it wants to go, just like the other markets whatsoever. Crude oil, very similar situation. However, it is a little bit skewed to the upside. Right now is testing the 100 piece moving average, 63.20, but these movements to the upside or to the downside are not dynamic, are not aggressive. Those are not impulsive wave progressions. It's more like a very limited range, limited projected target range movement to the upside or to the downside, right? So there is no intention in this movement, right? We got some correction, we got reaction, we got some correction, we got reaction, right? Nevertheless, it looks like the 66-65 area is getting quite tight right now, and it's getting rejected every time the market gets there, right? So every time the market is trying to rally, for now is getting rejected. Look at this series of the rejections here from this levels since 65.52 towards 60. There is 66.47. So almost $1 wide zone of the rejection, right? So please take take this into the account, right? So the bulls are trying. The 100 piece moving average keeps going higher. Nevertheless, the bulls are getting rejected. And last but not least, this is the Bitcoin, and the Bitcoin doesn't actually do anything constructive over the weekend. It keeps trading inside of this range. It broke above the trend line. Nevertheless, it didn't actually help whatsoever. We went as high as 70,000, almost 71,000. Then the bearish engulfing pattern, rejection, and now the market is back below the level of 50 after falling from the level of 60. But with the level of 60 on the RSI, didn't come any new local high above 62,271. So it's definitely some sort of the weaker move to the upside, resulted immediately in validation of this movement to the upside and breakout of the RSI above the level of 50, right? So it gets invalidated. We are back below the level of 50 right now. It's 47 points. It's not like a massive dump just yet. It's not like a massive movement to the downside. Nevertheless, please keep an eye. 65,117. This is the next target for the bears, because it looks like again we've been seeing this market to test the technical resistance so many times that yet another range is being built here right now. Just below the 100 period moving average. So this range is getting stronger and stronger, and sooner or later the bears might take into the account the situation and finally push the prices way more lower. The ultimate target is obviously $60,000, located at the lows from the February 6, 2020. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.